Hi everyone, Nick here looking at gold. I think it deserves a video because it's a pretty complicated trade. I, I don't know if I want to call it a trade. Anyway, there's an opportunity. Today, the markets were up. Today is, what is it? April 6th, Monday. Huge market move. And we're talking like big time, like probably a record somewhere. Not every day you see a market go up 6 or 7%. And the VIX only down a little bit, and the VIX is still over 40. That's just shows you how bifurcated we are and how nervous the market is because the whole world's still on pause. Simon said stop, and Simon did not say go yet for the world. So what do I do with this gold rally? It was up 3%, and more so after hours. As I'm speaking, it's spiking. So this is the GLD. I think for a better opinion, I would need to look at the futures contract because it shows me the overnight rallies and dips and all of that. So I will do both. So this is the GLD, and you can see visually I had drawn a limits with the white. And I remember saying something that it was a long, and then, first of all, we caught a huge rally on these two lines. And then right around here, I said, I'm out. And that I said the target was still $20 higher, like off the chart. But I said I will book and rebuy. Okay? And then right here, Kramer said buy with both hands. He was right for a couple of days, and then it collapsed. This was artificial from whatever the Fed did. And, you know, they manipulated the market one way or another to save the market, and this was the byproduct of it. So definitely it was not a short down here. Along the way, there were some opportunities to short here and there, and I may have shared some, like around here, and it was okay for a few days, and then if you overstayed your welcome, you got bit. Today, they gapped and rallied. So what about here? So I'm on a, what is this now? A 2-hour chart of the GLD. So instinct tells me if I'm not long already, I'd want to see a few more ticks, like what happens tomorrow. Why? Because of this major failure zone. This is where I booked the last time I was long. So if I'm not long, why would I want to go long yet, already, or so soon? If I'm long, I can ride it out. It depends on the potential, on the person. But to enter long here is to make a bet, and for me, I personally would rather miss out on a few upside because really, if the breakout materializes at the time frame I'm looking at, the upside is still massive. So why wouldn't I miss out on a few dollars so I don't get stuck long the wrong way? I mean, look at this rally. This is an impressive rally. I hate chasing. This is the definition of chasing. Up 6 or 7% on gold. That doesn't usually happen often. So okay, so this is a 2-hour chart. Let me go back to a daily, which is what most people are used to. Okay, and I'm going to take out all the drawings. Okay, so this is where it failed miserably. That's a miserable fail. That's a daily chart. That day it rallied and then miserable. It tried another time. It tried 2 more times with 2 doji-ish candles, and they left. This one was somewhat bullish. It left a long tail below, so it should have, you know, gone up and gone, but another 2 tails. So at worst, I mean, I know that 158 or 159 or 160 seems like a long ways from 157, but is it though? It's not that long. I'm okay missing out. Why not do this? Add an alert. I had an alert, and it triggered today, so I'm just going to say open air. Because now I reset my alerts after hours, so next time it gets there, and I can chase it. So I did say that the upside is huge. So let me put down my lines. So you can see how my upside is up there, like they go to the moon. Gold has been here before, so let's move out to a monthly chart. Okay, let me take out all the drawings again. I forgot how busy this is. All right, so this is a monthly chart for a long period of time for gold, for the gold ETF. And here's where we are right now, that blue line right there. And if you look, wow, this is important. So, okay, 1 second. This is the blue line where we are right now. Look at this candle, where it failed back in 2013. That was a major top. before all of this happened. Okay, so I'm not saying this was going to happen now. I'm saying that anytime you come back to a ledge that's this sharp, people will get nervous and they would buy and sell, buy and sell. Whoever was stuck, if they didn't sell on the first time they got back up here, maybe second or third, this is their fourth chance to get out. Also, if I look left, it has been pivotal. So for this zone up here, that blue line is pivotal. Moreover, I put the orange line, that was my trigger that I just set. So somebody that was up here and they didn't get out and then regretted it. I mean, that was a scary fall. When I say pivotal, look how, this was a lid and then now it's support, right? If I look left, it was a place where it was a place of interest back then as well. And we're talking like 2013. It still is pivotal now. So charts don't forget. They remember. So if I had a range to watch, look at this monthly candle. Easy for me to say. A low of 135, 136, and a high of 158, 159 almost. So if I were to put a box, I'd put a box on these edges. They will come back into play at some point. So I would want to see them at least break out of this. Right? And the upside will be a lot higher. But they have to get through, right? They have to get through. What else? Why do I have the Fibonacci here? 50% is right here, I think. I'm going to take it out. I don't remember what it is for, so I'll just take it out. Less noise. Okay, so I did mention that I wanted to look at the gold futures. So that was the GLD. Now this is the gold futures contract, so it trades after hours as well. So I'm trying to see, I did have a reason why I wanted to do this, and let me see if I can remember. Okay, so it shows me that there is a potential inverse head and shoulders. Everybody's familiar with the term head and shoulders. This is the opposite, where you've got one shoulder, one head, and one shoulder. This is to show you that it's okay to miss out on a few dollars, because per this, it's not perfect because this should be up here, the neckline. Oops, bump, the neckline. It's almost perfect here, here, and here. This is a little lower, but in my book, that's totally okay. So the ideal target is this much upside, this much upside. So they go from here and they go up that much. So you can see the yellow line goes up. It should be a lot more. So that brings that 180 on the GLD kind of into the picture. I'm not saying that's where it's going. I'm saying that if indeed is a trigger that's going to last, this could be where it's going. So I put it here, but it could be a lot higher. It should be a lot higher based on this dip. I'm not an expert technician that draws it with a fine pencil, but I'm telling you, anytime they attack a neckline and they fail miserably, like look at this miserable fail, 2 miserable fails, and they come back and they break through it in 1 hour or 2 hours, all they need is just come back to it, bounce off of it, and gone. So I would rather do that, chase after the fact, than start early and find out that's going to be a reversal. We don't know what these guys are going to do and gals at the Fed. We don't know what the dollar is going to do. It's a mess. It's uncharted territory, literally. So the only thing I can rely on are the charts, because the fundamentals are sidelined. They're artificial right now. They're literally artificial. So what other clues? Silver tends to want to trade with gold, except for a while recently it was going the wrong way. And it was a horrible crash in silver. I mean, like even worse than gold. So now silver also has a bullish pattern. So if you think about it, they go one push, they relax, and they go another push. So it could conceivably fill the gap all the way to 15.5. Maybe 15.2. At least to this candle here. So there's a lot more upside, and $1 on silver is a lot. So, but here's my advice on silver. As far as a trading vehicle, it's horrible. For some reason, I've never been able to make money off of it unless I buy in the money or really at the money premiums and no spreads, just plain out calls. So if I want to chase it up, I'd either buy silver, SLV, for $14 a share, or I would buy calls at whatever line I'm trading. In this case, what is it at? 1403. I'd buy the 14 call or lower. So I'm immediately in the money, and then any move will give me appreciation. Otherwise, I could guess right, and if I don't have the size of the move right, I would lose my money anyway, even if the move is 20%. If I'm not in the money, that premium doesn't come into play. So I would either use the SLV to buy or use at the money. I don't use spreads. I don't try to sell puts or anything like that. It's just too cute. It's one of those things where I'd want to bet on it or not bet on it. And that's how it works out with the silver, in my opinion. Right here, the bulls have control at this time frame, which is 4 hours. Same here. So the buyers are in charge. There's going to be a ledge test, 1450. There's going to be a test. Another one around 15, but it could close that gap all the way up here. I'm not sure. But once it gets to that level, it's an exit point. It is a visual, I don't know if that's an official ABC. Let's call it 3 pushes. You know, they go 1 push, they go sideways or dip, and then they go a second equal sized push. And look at that. If I did it right, it matches this perfectly. Right? That's not a coincidence. So anywhere here, if I'm long silver, would be my exit point, because at best they're going to do this. So, and then they're going to do this to attack it again and then come back to it and use it as floor. Then it would be to chase back up here. But if for a trade, if I'm not investing in silver for a year or two, I would exit anywhere near here, wait for the reload and push, and then buy it if they're able to take it out. Otherwise, this zone might be resistive. I'm not making the call. I'm just saying how I would trade this. So gold, is it the same? A little different. You see, this, the makeup is different. They're already at a ledge almost, versus the ledge is way up here that fall apart. So let me see. Go back to gold. Yeah, that's the same point in time, and gold is above it. So they're not the same. Trade them differently. Don't listen to these guys on TV that say, oh, in relation to gold, it usually is. Nothing is usual. There's nothing usual about these times. Everything is new. Nobody knows diddly squat about nothing. Anyway, next signing out.